Bitcoin. You hear it everywhere. But what is it really, and more importantly, is it too late to get in on the action? Look, I get it. Bitcoin can seem confusing, intimidating even. In this video, we're going to break down exactly why Bitcoin could still be one of the smartest investments you make in 2025. We'll cover everything from what Bitcoin actually is, to how it works, why it has value, and the potential risks involved. By the end, you'll have a clear understanding of whether Bitcoin deserves a spot in your portfolio. Stay tuned till the end to learn the risks and how to get started the right way. Let's dive in. First things first, what is Bitcoin? Let's dive into the basics. It's the world's first cryptocurrency, launched in 2009 by the mysterious Satoshi Nakamoto. Despite numerous attempts, the true identity of Satoshi remains unknown. Bitcoin operates on a decentralized network called blockchain, which ensures security, transparency, and no middlemen. This technology is revolutionary because it allows for peer-to-peer transactions without the need for a central authority. Unlike traditional currencies controlled by governments, Bitcoin is limited to 21 million coins, making it scarce, just like gold. This scarcity is a key factor in its value proposition. This scarcity is one of the reasons it's often called digital gold. People see it as a store of value similar to precious metals. Think of blockchain as a giant public ledger that records every single Bitcoin transaction ever made. This ledger is immutable, meaning once a transaction is recorded, it cannot be altered. This ledger is distributed across a network of computers around the world, making it incredibly secure and transparent. Each computer or node has a copy of the entire blockchain. No single entity controls it, and anyone can join the network and view the transaction history. This openness is a fundamental principle of Bitcoin. Bitcoin's value comes from a few key factors. Its limited supply, decentralization, and global accessibility all contribute to its worth. First, its supply is limited. This built-in scarcity is a major driver of its value. Unlike traditional currencies, which can be printed endlessly by governments, there will only ever be 21 million Bitcoins in existence. Second, Bitcoin is decentralized, meaning it operates without a central authority. This means it's not subject to the same inflationary pressures as traditional currencies. Its value isn't eroded by excessive money printing. Third, Bitcoin is global and easily transferable. You can send it across borders without worrying about exchange rates or banking hours. You can send Bitcoin to anyone, anywhere in the world with just a few clicks. This ease of transfer is one of its most appealing features. Reason number 1, Bitcoin can be a hedge against inflation. As central banks print more money, the value of traditional currencies like the dollar drops over time. But Bitcoin's supply is fixed, making it resistant to inflation. Over the past decade, Bitcoin has gained a reputation as a store of value, preserving wealth while fiat currencies lose theirs. Think of it as the 21st century version of gold. Because Bitcoin's supply is fixed at 21 million coins, it's inherently resistant to inflation. No matter how much governments print, no more Bitcoin can ever be created. This makes Bitcoin an attractive hedge against inflation, especially in today's economic climate. As more and more people realize the inflationary pressures on traditional currencies, the demand for assets like Bitcoin is only going to increase. It's not a get-rich-quick scheme, but a long-term strategy to preserve and potentially grow your wealth in the face of inflation. Reason number 2, mass adoption. From tech giants like Tesla and PayPal to countries like El Salvador, Bitcoin is gaining acceptance worldwide. More businesses are allowing Bitcoin payments, while institutional investors and hedge funds are adding Bitcoin to their portfolios. As adoption grows, so does demand, pushing its value higher. What started as a niche technology embraced by a small group of tech enthusiasts has gone mainstream. Major companies like Tesla, PayPal, and Microsoft are now accepting Bitcoin as payment. Even countries like El Salvador have adopted Bitcoin as legal tender. This growing acceptance by businesses and institutions is a clear sign that Bitcoin is here to stay. Think back to the early days of the internet. People were skeptical then too, but look at it now, it's an integral part of our lives. Bitcoin is following a similar trajectory. As more people understand its benefits and use it for everyday transactions, its value is only going to increase. Chapter 4. Decentralization and Security, the Power of Blockchain. One of the most appealing aspects of Bitcoin is its decentralized nature. Unlike traditional financial systems, which are controlled by governments and financial institutions, Bitcoin operates on a decentralized network, The blockchain. This means there's no single point of failure. No central authority can shut down Bitcoin, censor transactions, or manipulate its value. This makes Bitcoin incredibly resilient and resistant to censorship. Think about it. With traditional banking, your money is held by a third party. If that bank fails or your account is compromised, you could lose everything. But with Bitcoin, you're in control. Your funds are stored on the blockchain, secured by cryptography, and accessible only with your private key. In a world where data breaches and financial fraud are becoming increasingly common, Bitcoin offers a level of security and peace of mind that traditional systems simply can't match. Blockchain technology isn't limited to just Bitcoin. It has the potential to revolutionize a wide range of industries. Chapter 5. Limited supply, growing demand, Bitcoin's future potential. We've talked about Bitcoin's decentralized nature, its resistance to inflation, and its growing adoption. These factors have already made Bitcoin a significant player in the financial world. But there's another crucial factor that makes Bitcoin a compelling investment: its limited supply. Unlike traditional currencies which can be printed endlessly, Bitcoin has a finite cap. Remember, only 21 million Bitcoins will ever exist. That's it. No more, no less. This scarcity is built into its very design. This hard cap on supply is written into Bitcoin's code and cannot be changed. It's a fundamental aspect of its architecture. Now, consider this. The global population is about to hit 8 billion people. As more people become aware of Bitcoin, interest and demand are likely to grow. Even if only a fraction of those people decide to invest in Bitcoin, the demand will far outstrip the limited supply. This creates a unique economic scenario. It's simple economics. When demand exceeds supply, prices go up. This principle has been observed in various markets throughout history. This scarcity is one of the key reasons why many analysts believe Bitcoin has the potential to reach astronomical prices in the future. They see it as a digital gold. Some even predict that Bitcoin could one day replace gold as the ultimate store of value. This would mark a significant shift in how we perceive and store wealth. Bitcoin's limited supply and growing demand suggest that its value has the potential to continue to rise over the long term. Investors are keeping a close eye on this digital asset. Now, before you rush out and invest your life savings in Bitcoin, it's crucial to understand the risks involved. Bitcoin, like any other investment, comes with its own set of challenges and uncertainties that you need to be aware of. Like any investment, Bitcoin is not without its downsides. It's important to approach it with a clear understanding of what you're getting into. First and foremost, Bitcoin is highly volatile. This means that its value can change dramatically in a very short period. Its price can fluctuate wildly in short periods, sometimes swinging by double-digit percentages in a single day. This can be both an opportunity and a risk. This volatility can be exciting for traders, who thrive on price movements, but it can also be nerve-wracking for long-term investors who prefer stability. It's essential to remember that you should only invest what you can afford to lose. This is a fundamental rule in any high-risk investment. Bitcoin is a high-risk, high-reward investment. The potential for significant gains is there, but so is the potential for significant losses. Don't let emotions cloud your judgment, and never invest more than you can comfortably afford to lose. It's crucial to stay rational and not get swept up in the hype. Another risk to be aware of is the potential for scams and hacks. The decentralized nature of Bitcoin makes it a target for cyber criminals. Because Bitcoin is decentralized and transactions are irreversible, it's essential to take precautions to protect your investment. This includes using secure wallets and enabling two-factor authentication. Always use a reputable cryptocurrency exchange or wallet, and be wary of phishing scams or suspicious emails. Trust is key in the world of cryptocurrency. Educate yourself about common scams and best practices for securing your Bitcoin. Knowledge is your best defense against fraud. Now, if you're ready to dip your toes into the world of Bitcoin, here's how to get started. 1. Choose a reputable cryptocurrency exchange. This is where you'll buy, sell, and manage your Bitcoin. Some popular options include Coinbase, Binance, and Kraken. Each has its own set of features and fees. Do your research, compare fees, and choose an exchange that suits your needs. Look for user reviews and security features. 2. Set up an account and verify your identity. This step is crucial for security and regulatory compliance. Most exchanges require identity verification to comply with KYC, Know Your Customer, regulations. This helps prevent fraud and ensures the security of your account. 3. Fund your account. You can typically fund your account via bank transfer, credit or debit card, or even other cryptocurrencies. Make sure to choose the funding method that works best for you. So after all that, is Bitcoin the right investment for you? Well, that's a question only you can answer. It depends on your individual financial goals, risk tolerance, and investment timeline. Bitcoin is not a get-rich-quick scheme, and it's not for the faint of heart. But if you believe in its long-term potential and are willing to ride out the volatility, it could be a valuable addition to your portfolio. Just remember to do your own research, invest responsibly, and never invest more than you can afford to lose. The world of Bitcoin and cryptocurrency is constantly evolving, so staying informed is key. So is Bitcoin worth the investment? If you believe in its potential to transform finance, hedge against inflation, and grow in value, then it just might be. But remember, every investment comes with risks, so invest wisely. Thanks for watching. If you found this video helpful, like, subscribe, and share it with someone curious about Bitcoin. See you next time.